that reduce growth but also increase inflation. For the last decade, all the shocks were stuck deflationary.
We expected actually a recession in the US in the beginning of 2020.
It's going to continue. Some stocks in America are turning into a bubble. The bubble's going to come, then it's going to collapse.
Based on what the mainstream media is saying, the US economy seems to be getting better. But when you dive into the reality of this situation, the state of our economy is not well, and the economic boom being propagated by the media is just hype, and the reality will soon set in. This is like a fairy tale that at one point in time will have a very nasty ending. For example, the United States holds the largest amount of debt in the world, yet the do-nothing politicians are not taking any action. They seem to be very ignorant. Not only are they ignorant, but also out of control, because they're still initiating more policies that'll take our already dead economy to a very bad place. If action is not taken by the authorities, the economy is heading in the wrong direction. We might experience the worst economic collapse in history. Here are some of the signs that an economic collapse will hit any time. 1. Business debt is almost out of control. From the year 2006, the United States debts have skyrocketed from about $2.6 trillion to a staggering $5.8 trillion. The non-financial company's debt has been at a very high rate. Recently, we've seen a $650 million rise. This is about 6 times the amount added in cash by these companies. Keep in mind that a large proportion of this debt was accumulated after the 2008 economic crisis, and this is something that the policymakers should have realized for all those years. 2. Students' loan bubble. The students leaving college now are not only leaving with a degree, but also they're coming out of college with the highest amount of student loan debt in history. This debt is now out of control, and in total, Americans have about $1.2 trillion in unpaid student loan debt. This is setting a good stage for a wave of defaults, especially considering the fact that most graduates cannot get a job. This makes it even more difficult to pay their student loans. This is not only affecting the college-age section of the society, but it's affecting everyone. For example, some old people are actually putting off their retirement because at their age, they're still saddled with the outstanding student loan. According to a recent study done by Limra Secure Retirement Institute, most retirees are bringing very high levels of student loan debt into retirement. For years, the levels of student loans have been skyrocketing, and it's now at a point where it's difficult to sustain it. Student loan has turned out to be such a big bubble that has changed the United States economy. And if things continue the way they are, this can easily trigger an economic crisis. Back in 1989, only 1% of the retirees still had unpaid student loan. But currently, we have about 15% of retirees who are yet to pay their student loan off. This hyper bubble is just growing bigger every single day. Eventually, this will cause high levels of default as many people cannot afford to pay their outstanding student debt. This might trigger an economic crisis. 3. High federal debt held by foreign investors. A whopping 34% of federal debt is shockingly owned by either foreign investors or governments like China, Japan, and other nations. For example, China owes us about $1.3 trillion, which is about 8% of the total federal debt. 4. High levels of unemployment. If you look at the federal government, you can easily think we have very good employment numbers. However, if you look closer into the numbers and the reality, you'll realize that the books are cooked, just like in the federal debts case. The real employment numbers are just a fabrication and don't even take into account those who stop looking for a job because they can no longer find any. 5. Escalation of US and China trade war. President Trump has been championing his America First campaign with a fight on steel dumping. He's imposed additional import tariffs on steel against countries like China, India, Canada, and the European Union. For about 3 years, China has been the main focus. Trump has blamed China for undercutting the U.S. goods with their undervalued currency. As a punishment, Washington has imposed additional tariffs on a wide range of Chinese goods, and there's speculation that the sanctions will be extended also to the Chinese mobile phones, laptops, and computer games consoles. It's difficult to measure the impact, but there has been a big downturn in the trade since the tariffs began to bite. This is happening in the midst of other economic challenges in the United States and might not be long before we experience one of the historic economic meltdowns in the U.S. 6. Slowing economic growth. President Trump already inherited a bad economy. In the last few years of his administration, he's given the buoyant economy a sugar rush of corporate giveaways and reduction in income tax. The growth we've seen in the last 3 years has prompted the Federal Reserve to increase interest rates as a way of calming things down. On top of the trade war and a sugar rush economy, we have very high borrowing rates, and this has really affected the U.S. manufacturing sector. The industrial sector is now experiencing a slowdown amidst increased import and production costs. As a way of being re-elected, Trump has criticized the Federal Reserve for increasing the interest rates. This has recently forced the Fed to lower the interest rates again as a way of bringing an economic stimulus. This has resulted in increased borrowing, and it will only temporarily fix the U.S. economic situation for political gains. When the manipulation is over, the truth will set in, and we may find ourselves in a very nasty economic crisis. This decline in industrial production is just a tip of the iceberg of what's coming to the U.S. economy. 7. The housing market debt. It's clear that there's always a limit when it comes to financing a home using a mortgage. In the past few years, this limit has soared high because of the low interest rates in the United States, and it's now possible to take bigger loans when it comes to financing a home. This has caused a certain level of over-leveraging in the housing market, making prices to soar. Currently, house prices are increasing at a higher rate than the incomes of average Americans. The low interest rates have been caused by slow economic growth that's forced the Federal Reserve to slash interest rates as a way to stimulate economic growth. This has happened for the first time since the previous economic crisis back in 2008. Generally, the mortgage market is one of the most competitive businesses in the U.S., keeping in mind that the United States is the biggest real estate market in the world. Because of this, on top of greed, banks can go to any extent in giving mortgages, as long as they have an opportunity to make a profit. This leads to excessive lending by the banks, and for more than a decade, this has been taking place with little intervention from the government. As a result, we now have a housing market that is at the brink of collapse, and this can possibly trigger an economic crisis that can be worse than what we had back in 2008 during the global financial crisis. Even if the stock market is at all-time highs, experts are predicting that the housing bubble might trigger a very serious economic meltdown, especially when the mortgage holders will begin defaulting. The American housing market bubble is growing bigger every day, and a big collapse is now imminent. And when it hits, it will hit in a hard way. The 2008 economic collapse is still fresh in our minds, and at the moment, the price of a house is way high past the 2008 highs, and any signs of overheating in the housing market might trigger an economic meltdown. The housing market is ready for a collapse, but this has not happened because the Federal Reserve has fully subsidized this market. In the past few years, we've witnessed many bills relating to the housing market being signed. This has turned houses to be speculative assets, making the price go up at a very high rate to a point where the whole thing has turned out to be a bubble that will burst any time. 8. The stock market bubble. It's very clear to everyone that now the stock market is highly overbought and a big correction might happen. The stock market has turned out to be very speculative. This is what's created a hyper bubble because we now have the largest amount of money in history being pumped into the stock market. The market's current rise has caused fear among investors, and for the first time the UBS and other big investors have turned bearish towards the stock market for the first time since the 2008 financial crisis. This has begun a series of stock sell-off, and it will continue until when the Federal Reserve will not be able to handle the losses. If things get out of control, a big economic meltdown or even a depression will consume the American economy. The current bubble in the stock market will not continue inflating forever, and soon a big correction will happen in the stock market. 9. High inflation levels. In the past few decades, the United States economy has been experiencing the highest levels of inflation in history, as we are surely moving towards a serious economic collapse. Since 1970, the inflation rate of the US dollar has been 561%. This is especially due to the collapse of the Bretton Woods system, where the dollar was backed by gold. After the dollar was taken from the gold standard, the US dollar has lost about 84.9% of its value since the 1970s. For many years, the dollar has been steadily losing its value against gold. Because of this depreciation, most central banks have been dumping the dollar and replacing it with gold. This is because the dollar has turned out to be very unstable, and gold being anti-inflation, major banks and investment firms are opting to hold gold at the expense of the US dollar. The dollar has already lost more than 90% of its purchasing power, and if the government does not intervene, this inflation will result in hyperinflation, and that will result in the collapse of the American economy. The system is broken in many ways. If things continue like this, we may wake up to find that the dollar has been dumped as the currency for international trade, and the soaring inflation levels will make the American economy collapse. 10. Large amounts of the budget deficit. It is just the beginning of the 2020 fiscal year, and the US government is on its way to a $2 trillion deficit. This is a new record high, since we've never had this amount of deficit, which is very unsustainable in the long run. A high deficit means that a very large proportion of the budget will be financed by debt, bearing in mind that we have highest debt levels in housing, student loans, corporate loans, and credit cards. This deficit will take the US debt to a higher level that cannot be sustained for long. This will trigger the most historic economic collapse in the United States of America. In conclusion, we have a poorly formulated economic model that's made up of fiat money, poor economic policies, and unsustainable economic growth. With all these signs of a collapse, it's only a short time before we find ourselves in one of the biggest economic crises in history. It'll not be a normal recession. Oh, it'll be very different from what we're used to when we have an economic downturn. It'll be a severe economic collapse from which it'll be difficult to get ourselves from. 1981 is when we last experienced a real economic recession. And younger people, no idea of what an economic meltdown looks like. And probably even the older folks have already forgotten what happened back in 1981. The only thing you can do is to prepare well.